Do you need a spike? Oh, you got it. OK.
Thanks so much, Jonathan, and thanks to GeekWire. Totally thrilled to have this tremendous set of panelists here today. This is for the Innovation, Impact, and the Future panel. And for those of you that have read the title and description of this panel in advance, you might have suspected that this will be a very general interest panel covering a broad set of thought topics that reveal some of the perspectives of these CEOs and how they view these overarching technology trends, how those trends impact their companies, and how those trends impact the broader tech economy. And we want to keep this as interactive as possible. I have a great set of questions here that I can't wait to get your guys' reactions to. But if you're in the audience or watching on the live stream and would like to tweet in some questions, please use the hashtag GWSummit and tweet to me at my account at Julie Sandler. I'll be monitoring as we go, and we'll try to incorporate a couple of these questions as well. I also think John will be doing some Q&A rounds at the end. So with that, one of the great things about this group right here is we have such a diverse set of technology categories represented here. I think a lot of the people in this room today are familiar with you guys and with your companies, but just to kind of get things going, it'd be great to have you each, one, share just a few words about your companies and what you do, and two, shed a little light on some opportunities and innovations at your companies that you can share that you're most excited about over the course of the next 12 to 18 months. Maybe, Sarah, we'll start with you.
Great, thanks. So I'm Sarah Bird. I am the CEO of Moz. And for those of you who don't know, Moz makes internet marketing software. We are trying to help marketers understand and improve their search, their social, their content marketing. We also are happy to host the world's largest community of online marketers, about 800,000 strong. We're really, really passionate about our community. So some interesting stuff that Moz is up to. So we pride ourselves on our ability to do big data for very cheap. And I hope we actually get to talk about infrastructure a little bit more, because I think that this is driving a lot of innovation in our region. So we crawl the web and we grab all kinds of different information from it. And right now, our favorite technology is our link graph that lets you know who is linking to whom, including your competitors. And in the future, we want to take all the other signals we're gathering and actually help you predict where you might rank, and also get a more accurate understanding of how much traffic different websites have. We can actually do a better job, we believe, in the current solutions like ComScore of telling you who is succeeding on the web and who is not.
Glenn.
I'm Glenn Kelman. I'm the CEO of Redfin. We're a technology-powered real estate broker, which means we help people buy and sell homes. The business has north of 100 million in revenue. It's growing very fast. I think what's most exciting about it is that as we've grown, we've been able to improve the quality of our service. It was hard in the beginning to cover the territory, but now we have local agents in every neighborhood, which just means that we can deliver on a vision of being the Uber of real estate, getting people into homes quickly because we know where the consumer is, and we know where the real estate agent is, and we know when the property's available. The other big change that's happening at Redfin is, if you've noticed around town, we're just doing much more on the listing side of the business, and that just creates an opportunity for us to be more disruptive. When we sell the house, we can auction it. When we sell the house, we can get people into it more quickly because we know when it's available. So it's just a very exciting time for us, because as we gain share, we get to do things with the technology that really wasn't possible when we were much smaller.
Great. I'm Barry Crist. I run a company called Chef. If you divide the world into new IT and traditional IT, we're in new IT, and we're an automation platform. So what that means is companies like Riot Games, who does the world's largest PC game, League of Legends, every time that game is played, it's a 5-on-5 match, every time that game is played, Chef actually sets up their infrastructure, sets up a bunch of virtual machines, and depends what region they're in, sometimes AWS, sometimes their own cloud, different providers in Asia. Game is played for 45 minutes, and then Chef tears it all down. Or Novartis, they'll run these virtual drug trials in the cloud using tens of thousands of virtual cores, using Chef for the automation surrounding those sorts of things. We're seeing right now this tremendous shift right now from traditional IT to new IT, and there's all sorts of opportunities kind of across the technology stack. So it's a really interesting, or perhaps terrifying time for some in our sector right now.
Well, two of you mentioned this notion of IT investment, traditional IT to new IT. Seattle right now is in a very interesting position. It's a city that is frequently referred to as the cloud capital. Not only do we have two of these leading sort of cloud platform technology providers, but we also have a number of these fast-growing companies that build layers of value on top of that infrastructure. Chef and Apptio and Second Watch and Tableau. There's a ton going on here. And Barry, I've heard you speak before about the acceleration of the shift from traditional back office IT to new IT, as you just mentioned, with the focus on speed and innovation and delivery. For you right now, what are some of the trends and opportunities that you and your team are thinking about, and what should entrepreneurs be thinking about that's critical to understanding that transition?
Well, for us, and we deal in the enterprise space, the first trend, and in fact the UPS speaker touched on it, every company is turning into a software company to some degree. And we go back, and I think Netflix is a great example. Netflix used to ship DVDs. We actually forget that Netflix was not a technology company because they've become so deeply ingrained that in fact they now are a software company. That's true of John Deere, who's making tractors with sensors, and you buy software from them that gives you information about their farm. Or locally here, Nordstrom, has made a very committed decision to compete in the digital world with all their competitors, including companies like Amazon. And I don't want to share all of their story, but it's a fascinating one, and watching them go through a cultural shift to become actually a software company, to have thousands of developers and really develop with the best practices of the tech innovators out there in the industry.
Well, even the Andreessen quote, software eating the world, even the hardware companies that we saw featured earlier today in the invention segment. I mean, hardware companies are software companies too, as well right now.
And more. I mean, take the auto industry. Who will be driving your car very shortly will be software, and those companies will either be competing or partnering with companies like Google. So it's across all industries, all sectors.
Well, Sarah, I know you've got some interesting thoughts on this. I've read some of what you've written before about your experiences with IT investments in the past. As you guys scale, where are you thinking about where to strategically deploy capital and make those investments?
Yeah, I wrote a little blog post about, Moz is very transparent, so if you're curious to know more about how much money we make, how many employees we have, where we spend our money, it's all on the web. Pretty boring material unless you really like to geek out on this stuff like we do. I wrote a little bit about our transition, actually, the majority of our infrastructure off Amazon Web Services and into our own private cloud, and it caused quite a bit of a stir. I walked right into that one. There's a lot of passion in the community and the industry around this. And we really did discover that there are some things that Amazon is fantastic for, and we still use Amazon today, Amazon Web Services, particularly if we're bursting, if we have short, finite processes, it's fantastic. And for most startups, Amazon is powering so much great innovation. I mean, if you're spending less than $200,000 a month, you're just not going to beat Amazon. But we have big data as our business. I have no business if I don't have big data, and we waited a bit too long to invest in our own infrastructure, because we were spending on the tune of $600,000 a month, $700,000 a month, and not getting the uptime and the quality that we really needed. So we built our own data centers and went bare metal, and now we're having much better results and running much more efficiently. Again, I don't want it to be there's only one right way to do it, because there are many different uses for different systems. So.
Well, these kind of investments at this time I know are critical for all three of you. You three represent companies that are growing very quickly and at a very interesting time, in fact. Over the past couple of weeks, there have been some interesting discussions in the Wall Street Journal that I know GeekWire has covered as well, featuring an interview with Bill Gurley from Benchmark. And I think there was a dramatic headline along the lines of Bill Gurley sounds the alarm on this idea that companies are taking on too much risk that they are spending too fast, that they are burning too fast, perhaps due to the fact that we're in this very cash-rich environment right now, and there's this time of abundance where there was a perceived line of people waiting to write you checks. So for you guys, do the macro conditions we're experiencing right now play a role in how you operate your companies? And do you think that some companies may end up paying the price for the decisions they're making now? Maybe Glenn, I'll start with you.
Oh, well, I think the environment has definitely changed. At this point, we have public company investors involved with Redfin, and so we're sensitive to it. They've been very aggressive about wanting the company to grow, and it's been a business that's mostly been run out of the cash register. Last year, we were basically break even. But I just think if you talk to almost anyone on Wall Street, anyone on Sand Hill Road, the environment has changed. And I think you have to earn the right to really lose a lot of money. So if you've never been profitable, and it's been 5, 6, 7 years, that just strains credibility at some point. Whereas if you've demonstrated that you know how to make investments that pay off and you bring the company back to profits periodically, I think that gives you some credibility. So it's definitely a more balanced story, but you just have probably 10 or 15 household names, really premier late-stage companies that have been spending tens or even hundreds of millions of dollars that are now being brought in.
Yeah. Well, it's an interesting article, and on the one hand, I understand its point of view, but here's where I really disagree in our space, on this idea of growth versus fitness. We're seeing, again, super interesting time. We're seeing the destruction of traditional IT, and what that means is there's going to be a rise of new titans over the next 4 or 5 years, and this is not a time to sort of sit on the sidelines and be shy about it. I mean, this is a time to go out and grab it. And so as a leadership team, you have to push both those. It's fitness of how do you create great culture, how do you treat your customers incredibly well, but how do you just get on it and go for it? And for us, it's mash the gas pedal as hard as you possibly can, without having the whole thing blow up and losing the plot.
Well, that idea of growth versus fitness, there was an analogy, I think, in the piece, this bird population in the Galapagos, and they survive year after year, and then one season, there's an abundance, a total surplus, and then the next year, that bird population kind of disappears. I know the three of you meet pretty regularly with a lot of other CEOs and mentor a lot of CEOs. Do you see that risk, Sarah?
Well, look, I mean, the question of, is there a bubble and how dangerous is this? I mean, there's definitely, it's not a binary thing. To me, it's a question of, how risk averse are you? How aggressive do you want to be? And there's certainly some investments that, to me, feel way overpriced. On the other hand, I also want to be really clear that I see the companies that are getting these great valuations, gigantic valuations, they have real growth, right? I mean, it is not like the late 90s, early 2000s where there wasn't any revenue there. I mean, they're really driving growth. I think it's the attitude that you have, right? They're there to capture share because they see it. Now, the reason why I don't think we're in like a 1999 situation is because if you don't have that 60% growth, 40% growth, 50% growth, if you don't have really high valuations or growth, you're not getting the same valuations. I do think that because there was so much emphasis on growth, people weren't looking at burn closely enough, and I see them doing that now, which I think is great. And for Moz, it comes down to a question of culture, right? How short is that path to profitability? I don't need to be profitable, but for Moz, because we ran self-funded and profitable for so long, we keep a pretty short sight line to get back to profitability. We're less comfortable than most with burn, but I think it totally makes sense in other industries to be more aggressive. So I think it comes down to the investors you have and to the rest of your industry, right? Because you do have to benchmark against your industry if you're going to win.
I just think it depends in part on your balance sheet, because if you just don't have the reserves and you have to go back out for more money, you really can be caught holding the bag. I remember I started this company called Plumtree. We were losing money at the behest of our board. The dot-com crash happened, and it just went from one end of the spectrum to the other almost immediately, where we were just jerks in the next board meeting. What were you thinking? And no one had the temerity to say, well, We were doing what you told us to do. And both Bill Gurley and Fred Wilson and Mark Andreessen have all made the same point that people who haven't been through that before just don't know what it's like. And there's now an entire generation of entrepreneurs that have never seen the winter. They've only seen the summer. And once you've been through a winter, you can never forget what that was like. It's just a very different environment, and it's very hard to predict. So you just always need to be in a situation where you can control your future, where if you can't get profitable with the capital that you have, you're going to be dependent on someone else's largesse.
Right. Well, I just echo something Glenn said, which I totally agree on, is it really depends on your balance sheet. And can you be prepared? Because the market can shift very quickly. And how do you get out there and be prepared if things do turn? You can actually play offense in a decline. And that's a very powerful position to be in.
Yeah, and I want to add to that that is why I think there's a personal decision about risk, and that applies to entrepreneurs and to their investors. Because some investors, and like I said, me personally, I want that shorter path to profitability where it's in my sight line. And other people have a different, much more aggressive appetite, and they're willing to bet it all and go big because there's going to be one winner in this category. They're going to take all, they're going to take the majority, and they can stomach that loss. And we may have some big failures, but I don't necessarily think that's terrible news, right? That's the risk. That's the game we're in, and it's okay. I think it will actually help correct some things. I don't think that it will be. I don't think it will be the same experience as it was in the dot-com bubble.
Why not?
But little corrections.
Because I don't necessarily either, but I'm just interested. Why not?
Because I think that the fundamentals on most companies are better. They do have revenue, right? They do have revenue, or they have big communities that I think genuinely are valuable. So it's just not quite the same. There will be some people who get ahead of themselves. And I think that happens in good times and in bad, but they're more spectacular in cash-rich times, right? The failure is more spectacular in cash-rich times.
Well, and there's some
and
there's some silly stuff. I mean, the Yo funding, I think that was a great one to poke fun at. But back to the industry that I sort of live in, if we think of this shift to cloud IT or to web scale IT, it's actually really at its beginning. I mean, it's something that you see the shift, you talk to companies, there's no question it's definitively happening, and yet I think we're like 5 to 10% along the way, not 80% along the way. So there's a lot of headroom, and I think that's back to in certain industries what's driving sort of an aggressive lean in, but it doesn't mean there's not going to be bumps along the way.
Well, all three of you sound psychologically like you're extremely conscientious and deliberate about how you think about this.
It's my job.
You talk about experience, you talk about the balance sheet, you talk about an awareness here. Do you feel like you've made any mistakes, I don't know, as things have shifted from a macro perspective? Yeah,
I mean, definitely, right? How much time do we have on the panel? Is this the mistakes panel? Because we can keep going. I mean, we did our Series B in 2012, and we raised $18 million for $15 million to the balance sheet, and we made like 5 big bets, all of them big, potential high return, right? And of the 5, I think 3 of them went really, really well, and 2 of them are like, I don't know if that was the right one to make. We certainly did not execute it as well as we should have. But the good news is if you make enough bets, right, they sort of subsidize each other a little bit, and so while I made plenty of mistakes, and I'm probably making some more right now, hopefully you've made the, you have your risk tolerance baked ahead of time, and then you have room to keep going and fix it, right? I mean, if you're not taking risks, you're probably not in the right field. You're probably not going to make it to the top if you're not taking some risks.
And I would say that the mistakes that Redfin has made, that I've made, have really come from a lack of conviction at times. So we've expanded one market at a time, and we're eager to demonstrate that every market could be brought to profits within 6 months for less than $50,000 of investment. And at some point, we realized that we knew how to bring these markets to profits, but still opened one at a time. We wanted to control the quality of the customer experience. We wanted to be careful with our capital. And so for me, the mistake was really in the not done. Now we're in a good position. We raised somewhat opportunistically last fall. So we do have a good balance sheet. Regardless of what happens, we're going to be able to invest in growth. But I think sometimes you do figure it out as a startup or a mid-stage company. And at that point, you don't realize it, but you can get as much capital as you want. Once you've got a winning formula, everybody's going to want to fund it. But we continued to run the business very closely. If I had to do it over again, I think we would have been much more aggressive, maybe a year or 2 years earlier.
Yeah, Glenn's right. I mean, first of all, for quality companies, money's available to you, good times or bad times. The math is different behind it, but if you're driving for success, in some sense, it doesn't really matter. Julie, to your question on mistakes, look, if you're not making mistakes, you're not playing the game. And so, everyone daily is making mistakes in their business, usually in our industry, because we have a lot of imperfect information, right? We make a lot of assumptions about where the market is, what it's going, what it looks like. And so mistakes are an inherent part of the business. I think, what great companies today are really good at is, failing quickly, learning from those mistakes, and really shortening the cycle that it takes to fix, address, learn, and go after it. And it's really, speed is become, that is the competitive currency today, and I think especially around the mistakes that you make.
For you, recently, at Chef, given sort of the changing tide right now, is there anything for you that you feel that you've made a mistake on recently? These guys have addressed some of those.
Yeah, Glenn's point's a good one. If I were to, if I look at things that, it's when you aren't going strong. Like for me, all of it's not being bold enough, not having conviction or courage on certain things. And we talk a lot about how to do the hard right things, and sometimes it takes you a little bit of time for a variety of reasons to get there. And I think that's just a theme over and over for us in our business is do the hard right things, no matter how difficult, and be bold and be aggressive. And it's like I said, it's a very disruptive time right now.
I just have one other comment. I know that it's popular to talk about failing fast and making mistakes, and I just think the one area you have to be careful about as a CEO is making mistakes around hiring too many people. Those are people that you will have to walk out of the building if you can't get the cash. And I had to do that at Redfin when the real estate market collapsed. I had to do that at Plumtree just a couple of years before we went public. And I think it just, and I wasn't accusing anyone of being flip about that.
There's a big difference between people, and I was thinking in terms of product features and
but I just think if you have a business
there's a human side to it.
You don't have the balance sheet to bring it to profits if somebody said there's no more money and you had to make a cut, I would just think carefully about a more aggressive posture. I just think you have an obligation to the people who work for you as you get beyond 10 or 20 or 30 people to manage the business really responsibly. And that's the hard balance for me. We have a very people-intensive business. When we make a bet, we make a bet with technology, but the difference between us and other businesses is we also make a bet with people's livelihoods, and so we want to be able to honor that.
Well, Glenn, shifting gears a little bit, you just mentioned the people intensity of the Redfin business. There's been a bit of press in recent months around the role that the human point of contact can play within a technology company, how the human touch can shape the experience for a tech company's customers, be that someone manning the social media feed or the phone line or the email or even physical brick and mortar stores and feet on the street. For you, this is core to your business model. How does the human touch, how does that shape the Redfin experience, and how should it for technology companies?
Well, I do think there's a new trend, which is to really have an impact in the real world, you have to operate in the real world. There are some businesses that are digital only. They are great businesses. They have very high margins, great leverage. But there are other businesses that can be very large that try to deliver a complete customer experience. So Crist and Andreessen Horowitz calls that a full stack startup. The guys at Greylock, call that an end-to-end company. And we're an example of that. I think Uber's an example of that. Somebody had already developed Taxi Magic before Uber came along, but what made Uber special is they controlled the entire experience. And Sand Hill Road has definitely taken note of that. If you can build a business that reinvents transportation or reinvents real estate, or now I've heard of a company that's reinventing the primary care clinic in medicine, that is not $100 million or $200 million opportunity. That can be a $20 or a $30 billion opportunity. And I think it's sort of a gut check for the tech folks here in Seattle, for the tech folks in Silicon Valley, about how we're going to treat those real world folks. I really believe that technology has reinvigorated capitalism and made a lot of people believe that it can solve a lot of problems. But when I read about sort of the 1099 economy where people aren't really full members of that company, I always think there might be a better way. I think that if you actually have the folks who are delivering the service work with the technologists, you can deliver a better experience and you can understand the customer better. You capture more data and you just build a better company when those two cultures unite.
There's trade-offs to it, though, too, from a cost and a hiring risk perspective.
Well, it makes your business model more brittle, which is why I made the point about being careful about hiring. And it certainly limits your margins. You have to generate far more revenue to throw off the same amount of profit just because you want to pay your people well. But mostly it's just capital intensive. And right now, the world is our oyster. You can raise money to do something really audacious. And even if you're only dropping 30 or 40 cents on the dollar to the bottom line, if you've got a really enormous opportunity to reinvent transportation, to reinvent real estate, to reinvent medicine, nobody's worried about that because there's $50 to $100 billion at stake. And so I think the Valley has kind of run out of just pure digital opportunities and suddenly has the checkbook to say, let's go after the real world, which excites me.
Sarah from Moz.
Yeah, I mean, I think that's so great to hear your perspective, and we have very different businesses, right? Because I'm purely selling software. I have no services component, so it's about $30 million a year is how much we do, and we have about 22,000 customers, and I've never had a salesperson on my team. It's kind of crazy, right? And these are customers from all over the world.
That's awesome.
Right? That's kind of amazing. So it's fun to be here with you because we have such, where our customers are, they have different needs, right? And there's room in the world for both of our models, and they are very different. So, from Moz's perspective, I don't have a sales team, but I do have 5 community managers, right? Because we are, while we don't have a lot of human touch, we are incredibly personable, right? We care deeply about people. We just engage them in a different way. And we're selling to people who are very, very comfortable online. They live online. Most of them are digital natives. They want to buy. They don't not want you to call them on the phone, right? I mean, I hate being called on the phone. And so coincidentally, I've built a company that doesn't call people on the phone. I don't like asking for money. And coincidentally, we built a business that doesn't do a hard hit asking people for money, right? It's sort of like get to know you. And then we all kind of collaborate together. And we share a lot of content for free. And you build trust between you. And then people are like, gosh, I really like you and you seem trustworthy. I'm gonna just put my credit card in and give your product a whirl. So it's very different. I'm really I feel really lucky that the capital structure of our business allows us to invest a lot back into R&D, a lot back into my team, and a lot into the community where it really belongs, because Moz wouldn't be what it is without that community of people behind it. It's a very different model. It's an exciting time, right, to be a business. It gets back to some of the earlier themes, I think, around it's not as much about mass market, it's about the right market, right? It's not just the most customers, it's the right customers for you. And I think Chris Anderson was a great person to kick off the day, reminding us about his book about the long tail and the free economy, because we're in the middle of it right now, and Moz benefits from that every single day.
Well, we have a question coming in from Twitter, real time. What's your philosophy on recruiting talent? Many startups have a salary cap. How do you attract talent in this environment?
Yeah, boy, I'll tell you. So first of all, I think the old adage of hire slow, fire fast is really true. And I think it's our biggest challenge with growth is keeping that bar really high. I mean, we have this reputation with our customers on sort of the quality of our technical talent that they talk with, they interact with, that's creating our products, and we don't want to lower that bar. The flip side of a lot of money around right now is there's just crazy stuff going around. I mean, it's a very good time to be a developer. It's a very good time to be an engineering leader out there, and they're demanding extraordinary salaries. And I don't think that you could hire top talent with the salary cap right now. I don't care how hot you are or what category you're in.
So what do you do?
Pay up.
Pay up. Yeah, it's a combination of pay up and for us, be very sure of what our vision is. And what we found is there's certain people that really, it's back to that discussion we had on we're stewards of our teams, right? And there's a flip side of, we have a lot of people that they know, like they smell our opportunity and they're pushing us to go for it. Like they don't want us to be, sort of small and irrelevant. And so I actually feel that we owe them, being aggressive. So I think if you're very clear about your point of view, you'll find that people self-select and they find you and they want to be part of that.
I would say our philosophy is really focused on just talent and values. So we love to see experienced candidates, but we're more focused on the upside. They're focused on our upside, so we have to be focused on theirs. But what's been interesting recently is I just think that diversity has really helped us. We've begun to have a critical mass of women in our engineering group, and that has begat more women coming to the company. And so, if you look in all the usual places for engineers, I think that you're going to be competing every time with Facebook and Google and everyone else, and that's certainly our experience. But I think if you just look in other places, sometimes you can bring in different kinds of folks, and it's really been good for us. It's helped us build better products. It's helped us build a different kind of culture and really stand apart from other employers.
Well, in terms of standing apart, all three of you have done a masterful job with this little thing called PR. This is another question that's come in. All three of you.
You should do that one.
And well, maybe we'll start with Sarah. For those in the room and watching on live stream today who are running their own businesses and think that PR will be a very attractive way to start to build a name, what tips, tactics, strategies have you used that you think can be effective?
So this goes back to what I was mentioning before at Moz, right, where it is really about the community and that we're very personable. I think the most important thing any company can do is get clear on their own mission and what they stand for and be loud about it and use all the channels at your disposal, of which there are many, and you have to go where the right community for you is, right? So at Moz, we got really clear very early on that we were about being transparent, that meant being willing to share our weaknesses, sharing things that most companies don't share, being very, very generous. We give tons of free tools and education. So you can't just say we care about our customers on your website and think, why don't they know we care about them? There's an action that has to come with that. So we got authentic about and transparent about what we care about, and then we acted on it. And I think that the community is really receptive to that, right? People like to get something from you first, and that builds trust. And for us, it's about that being willing to be vulnerable, and people really have responded to that at Moz. So, be yourself, I would say, and the right people will find you, right? If you be true to your mission, the right people will come. It ties to the recruiting strategy for us. The best recruiters are the people who are already in my company. And that has always been true, and in this tough market, it continues to be true. And it creates a wonderful virtuous cycle of, people who share our values usually hang out with other people who share their values, and it just keeps going and growing. And our core values are called TAG-V. If you guys actually heard of it, who in the room has heard of TAG-V? So several people, right? people in this audience know my company's core values. That's crazy, right? But it's because we talk about it so much and we genuinely mean it. We put our money where our mouth is, and it's been really exciting to see that take off. So is it PR? I think it's being authentic, and every company is a publisher now, right? In this world of engagement and conversation, every company should be publishing whatever is their truth and their story, and they should be doing it all the time.
Well, an ongoing theme in this panel has been this notion of how do you build a company, how do you build an innovative company? Going beyond the lens of your respective companies, what over the course of the next couple of years are you guys excited about from a technology perspective, whether it be gadgets you're interested in? The big Apple launch, I think, has inspired a lot of people. What themes in technology get you just super excited to be alive today?
Do you want to take it first?
Sure, and I take it, the world I live in is business software, the enterprise, the web tech companies. It's part of what Glenn was talking about earlier, the reimagining of everything. I mean, everything is getting, to some degree, torn down to its foundation and rebuilt in better ways, in more exciting ways, and it touches every aspect of our personal lives, our professional lives. They're both great challenges facing our country and facing the planet, but there's also, I think, the amazing promise of technology and how we choose to apply technology towards that. So I think, again, it's at the same time, and for different people and different points of view, both a terrifying time and both a really, really interesting time to be involved in this industry.
Well, I think we're almost out of time, but quickly, I'm excited, obviously, about technology that goes from the virtual world to the real world, but I would extend that. I'm also excited about technology that's not just for us and by us. I think there's a lot of products that cater to 20 to 30-year-old men playing video games and ordering sushi and having a TaskRabbit clean their bathroom. But if you listen to Mark Zuckerberg talk about the fact that 5 billion people in this world can't afford a data plan, and he wants those folks to be able to get the benefits of the internet, it just seems to me that sooner or later we do have a responsibility to folks who really live all over the world and are doing crazy things. And so you just see a lot of innovation in China and India that's not just about the top 10% of global citizens, that's going to help everybody. And I can't wait to see the world that's going to come out of that. I think we're just at the tip of it. You have to agree with that if you realize that only 18% of the world can even access the internet, can even know what's going on beyond their village.
Gosh, any answer I have does not sound as good as like changing the world with technology in the future.
Well,
I also care about changing the world. But my first thought, before I felt guilty about it after hearing you, was I can't wait to be a cyborg, and I feel like it is coming, right? I mean, this is such an exciting time with sensors and big data all coming together, and everything is getting personalized and more personable. I really can't wait until we extend this and we all start getting like bionic eyeballs, and we've got like Google in our heads, and we're just like paying with like blinking at something. Like I can't wait for that world. We have a ways to go, but it's really exciting to me, and I see all these trends coming together. Right,
Sarah, you will be software.
I can't wait.
Well, I think that concludes this panel. I want to thank so much Sarah Bird, Glenn Kelman, Barry Crist for a wonderful discussion.
Thank you. Great job. Great job.